You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Thanks for tuning into Mining Stock Education. I'm your host, Bill Powers. And in today's episode, we're getting an update from Heye Daun. He's the president, CEO, and director and founder of Osino Resources Corp., one of our sponsors. We spoke to Heye about 2 months ago, post the preliminary economic assessment that the company released regarding its Twin Hills project in Namibia. Heye is back on the show today to talk about a recent strategic financing. Heye, welcome to the show. Break this down for us. How did this financing come about? Who's it with? And what's the significance at this point?
Great. Thanks, Bill. Great to be back here. So I guess this is a little bit unexpected, this financing. And the best ones are always the most unexpected. And the reason being, we gave you an update 2 months ago on the PEA and all the very active work programs that we've got on the go. Obviously, that all costs money. And so as we're getting into the end of the year, with a weak market, our cash position, even though it's still strong, we got $8 or $9 million in the bank, but we're still going to spend a lot between now and the end of the year. So we would have ended the year relatively weak with $4 or $5 million in an uncertain market. And we felt before the vultures start circling, better to reload the gun. And that's basically what we've done. So you asked me, so that's how it came about. It was also opportunistic because, in fact, a key Toronto investor, Pat DeCarper, and the Power One Group, they approached us. He's an existing shareholder. He was one of the major shareholders in Neo Lithium, which recently got sold. So he's had success. He made money. He's looking to redeploy it. He's known us for a long time, 10, 12 years. And it's a vote of confidence that he was prepared to invest at not much of a discount. Yes, there's a warrant, it's never perfect, but I think it makes us look strong, and we're very, very pleased that we've been able to do it. In fact, we're in the midst of it.
You mentioned the vultures. So is this a non-vultured private placement versus or a non-brokered private placement?
Oh, yes. No. What I meant by the vultures are the people that sell you down in the expectation of another financing.
Not the brokers?
Well, all sorts, not just brokers, opportunists. No, we're happy with the brokers. We love the broking community. They're obviously an essential part of the business. We've got great relationships with a range of brokers. But the brokers at the moment couldn't do much because the financing window isn't open. So we would have loved to have done a brokered financing, but it wasn't available. And that's why we had to look at alternatives. We looked at converts. We looked at all sorts of things, trying to be proactive. And in this case, I guess we were lucky that we've got long-standing networks and relationships who came through when you need them. Not that we really needed it, but it was a prudent move. You don't know how the markets will go. And that's why it's just buying us a bit of breathing space and some assurance.
So you have, is it 10 rigs still turning with your current program?
Yes, it's between 8 and 10 rigs. We expect a significant resource upgrade around Q1 next year, which I consider that in the bag already. In fact, we're receiving the results as we speak. But we're using those rigs still to drill deeper. We're drilling out somewhere where we think, I said it to you last time, we think there might be, there's smoke. We hope to be announcing something soon. Still.
Can you define soon, Heye? Because, soon means different things to different speculators.
Yeah. I feel bad. On this one, I've been remiss. Is that what you say? We should have put something out a long time ago. But we're just waiting to drill more holes, get a few more holes into it. I think in the next 3 or 4 weeks, within the next 3 or 4 weeks, we'll announce something. We're just waiting for some more assay results. So that's there. We have a bunch of drill results, also assay results coming in. So we expect a big bunch of assay results imminently. So that should come out in the next week or two. Results in the next 2 to 3 weeks, and a couple of other things.
So your stock price has been as high as, I think, 160 Canadian. It's around 110, 115 as we chat. When I look at the Lassonde curve, it seems we're in that lower second trough of the Lassonde curve, but you're kind of speeding your way through that, if I understand correctly.
I think so. I think you're 100% right. We're in the final trough. I think in the next 6 to 12 months, I expect a substantial re-rate on execution and de-risking. There's so much de-risking and execution happening as we speak, which is not reflected in the share price. And that is actually that sums up the opportunity. There's lots of growth, downside protected because of low valuation. Yes, we've traded off 50% or so roughly from the all-time high. So have all other gold companies. But if you compare us to an index or B2 Gold or any comp you want to choose, we've actually performed defensively. We've sold off less. And I think when the market turns, I think and I hope that we'll be ahead of the curve and maybe outperform some others.
So how do you manage expectations as the chief executive? You have the expectations of people like me, the retail, private speculators. You have the institutions. You have the producers that could one day possibly buy you. You have the banks that you need to impress if you're going to get financing to bring it into production. Maybe talk a little bit about your executive philosophy of how you balance all that.
I think, you of course, you have to understand your audience. And the audience, different audiences are interested in different things. So corporates, I would say, are interested in quality. They're not interested in noise. Retail, without sounding arrogant, retail loves news flow. So drill results and so forth.
And what have you done for me lately, right?
No, not that much, I realize. But the problem is that retail also has a short attention span. Meaning it's easy for them to misinterpret things. So that's why we're not the guys that put out drill results every 2 weeks. We rather put out big bunches of results in one go every 2 months. That's more or less how we've done it. And the next one is going to be a very substantial drill results update. But when you get that, it's substantial and it's real. And I prefer that. So sometimes people get a little impatient, but I think it's a better way. Also, remember, the market has been dead over the summer holidays. No use really putting out good news into an audience that isn't even listening. And that's why we've kind of slowed down a little bit on the news flow. But coming into the last quarter of the year, I think that will certainly pick up again.
And then in terms of impressing the banks, that's what you're doing now with all the technical work. So you're setting the stage for those discussions.
Yeah, because, the banks, they in that last uptick in the Lassonde curve, so they want detail, they want drill density, bankable feasibility studies done at conservative gold prices, etc. And that's why we will do a follow-on study, a PEA by Q1 next year, which is all about maximizing the project scope and the value. But the banks they want the definitive study, and that's why we will come out of that PEA. We will very quickly, maybe 3 months later, 4 months later, we will have a definitive. The work that we're doing now is already going towards that. The problem with the definitive is because of 43-101 requirements, for example, you can't use inferred resources. And that's why a definitive usually has a smaller scope than a PEA. That's just the way it is. And that's why PEA first, another definitive afterwards. And that deals with retail and equity markets and the banks.
So Heye, you have this second potential discovery, which you told me when we talked 2 months ago. You said you're seeing quite intense smoke. It still needs to be confirmed, of course. But, are you thinking through more of a possible spin out, separating the Twin Hills project from this new discovery? Or can you share a little bit about how that fits into what you're expecting right now?
Okay, now let me explain. There are two things. When I say a potential additional discovery, I'm talking brownfields. We've got brownfields, meaning the stuff within 5 or 10 kilometers of the existing pit. I think we will find more answers there, which will make the Twin Hills project incrementally bigger. That's the kind of discovery I'm talking about there. But we have had other discoveries on the exploration ground. But, when I say other discoveries, these are surface discoveries. This is not drill intercepts yet. Surface gold indicating, there might be a gold system, there's potential. We've got a couple of those, but that's separate, that's somewhere else. And we're not getting much value for those other discoveries that I spoke about. I don't want to call it a discovery, anomaly, target, prospect, whatever. And those ones, we are contemplating potentially to do a spin-out. We looking at the details of that at the moment. It's a little bit too early days. I don't want to get expectations up, but that would be a neat way to distill that value and catalyze that value. But we've got to balance that with the question of how are we more attractive to a potential acquirer as a big package or as individual projects. So we're grappling with these things at the moment, but we are actively working on crystallizing, that was the word, crystallizing the exploration value, which we're currently not getting any value for in our share price.
You're sandwiched between two mines, the Otjikoto mine, which you sold to B2 Gold, and the Novichok mine. Any progress on the bidding for the Novichok mine that you could alert the audience to?
You can imagine I'm under CA. We are part of that process, so I can't talk much. I can say that the process is underway. I can say that I've heard that it's a competitive process. I've heard there are a number of bidders. The price is quite a lot higher than I would have liked it to be as an opportunistic buyer. But the reverse side of that coin is that as a benchmark to our project value, that will end up being very positive for us. So I think the process is unfolding as best as it could for us as a neighboring company.
But if I could put words in your mouth, it's going to be a win-win for you no matter what. Is that fair?
Absolutely. Yeah, that's true.
All right, Heye, a final question as we kind of wrap it up. What have investors been asking you recently that I didn't ask you in this episode?
You got me there. I haven't done that much marketing lately, mainly because of the market being so quiet. Most of the institutional investors are interested in de-risking, mining license. How long is it going to take? What do you still have to do to get there? How are you going to finance the project? Project finance is a question that's come up a lot. We've got project capital of 250 million. Eventually, it will be. And we've got $100 million market cap. So how are you going to bridge the gap? So that's important. So expect some news in that regard. We're looking at appointing a debt advisor and making progress on that side. Mostly around those questions. Of course, retail investors are asking drill results, exploration success, and so forth.
Okay. Well, the website is OsinoResources.com, ticker symbol OSI in Toronto and OSIIF on the OTC. You can reach out to Heye. Information is on the website if you have follow-up questions. But in the meantime, Heye, thanks for coming on the show, and we'll be looking out for those next drill results that are forthcoming here.
Great. I appreciate it. Thanks, Bill.